Let's move on and let's talk about what our market construct is looking like at the fag end of the year. Kunal, hi, good morning. What's in store for us? Some more consolidation or a meaningful move?
Yeah, some more consolidation. No meaningful move I would probably expect for the market so far. But I think what we are just doing in the last 2 3 months, we've been discussing this that we're trading into a range band for the indices, 500-point band, 25,750 as a support, 26,250 broadly as a resistance. The concern was that till last week or so, start of the previous week, when the Nifty was at 25,700 mark from those levels, when we managed to move up higher, the market breadth was starting to look a little bit more better. You had a net market advance to decline was almost in the favor of 1500 advances. 1500 is the net market breadth which was there for the 3 consecutive days. But then the last 2 days, that's on Wednesday and Friday, we saw the market breadth again disappointing into the favor of declines, and that's where the Nifty managed to recede back towards 26,000 mark. So it clearly tells you that if the market breadth is improving, then the Nifty is improving, or we are looking to head up higher. But if the market breadth is not improving, then we are going to the band of consolidation. Looking at the mid caps, small caps, the ratio charts, there is no inkling that the market's breadth is likely to open up significantly on the positive side consistently for a prolonged period of time.
Although there are pockets like some of the infra names, some of the railway names which are doing their bit within mid and small caps. But again, they alone can't lift the indexes up.
So it's more of sector rotation, Aisha, because what happens was initially it was the PSU banking stocks which did well. Now you have the PSUs, other names PSUs which are doing well, but then you have the PSU banking stocks which are receding. So it's more of a sector rotation which is happening within the play, but it's not all sectors firing at the same time. Some time back we had the IT stocks which are doing very well. Now you have IT stocks more or less consolidating. So it's more of the sector play, sector rotation. That's why the Nifty is not being able to find that ammo back again to try and fire up to new levels on the higher side.
Kunal, if you look at how foreign investors are playing the F&O plays, normally, we've seen towards the expiry, the open interest jumping for them. But we have seen now, there is a reduction in open interest for both the Nifty and the Nifty Bank, which basically means they are cutting down their long positions and adding short positions. And also the volumes have come off, right? Means I was looking at the Friday numbers. Silver Beast was the most delivered one on the NSE.
Yeah, absolutely.
So, how do you look at foreign investors, especially today and tomorrow, being rollovers happening, and Nifty Bank rollovers have been lower, and individual stock rollovers been have more than 50%.
Yeah, so I think rollovers are on the higher side for the next series. I was looking at the data also. So, for example, on the on Friday's session, you had 22 lakh contracts, 22 lakh the open interest dropping for the December contracts, and then rising almost 23 lakhs for the Jan series. So there was a additional jump of 74,000 to 75,000 on the Nifty itself for the Jan series. So that tells you that the markets are going into a series of January on a slightly higher OI base. We need to see how the trend evolves, but because the first 2 or 3 days of the expiry generally governs the entire trend, and we've seen that phenomena happening for the last 4 months, 4 expiries, where the first 2 3 days, if the index picks up a trend, it tends to carry on the trend for the entire series. So we need to see how that pans out for the first 3 4 days of this fresh series. But yeah, I think on the broad front, we are also seeing one more pattern. Sajit, from August we saw the net open interest data, the FI open interest data, and that is the average for the entire month. So we are looking at that ratio of 93%, short to long ratio. That ratio has remained constant, but the average number of contracts which are there, that's dropping down.
True.
So it was almost at 1,75,000 thereabouts in August. Right now we are at 1,30,000. So by the month, by the expiries, the average number of short positions are dropping, but yes, the average number of long positions are also dropping down. But then, this needs to change. Now, whether this happens in the month of January on the back of some triggers, etc., that's something to watch out.
So Kunal, for today though, what's your stock bias like?
So two buy calls, and specifically focusing on stocks which have been on high momentum. MCX is something which looks extremely attractive, trading at 11,000 mark at current juncture. So would look out for a higher target of 11,500 thereabouts for MCX, and stop loss could be kept closer to 10,750 mark. We've also seen many of the individual stocks like Vedanta etc. doing very well. So would suggest a buy on Vedanta for a near-term target of 630, stop loss at 580.
Okay, and Kunal, before this, we were talking about Coforge and that entire acquisition of Encora that we've seen. On the charts, Coforge has consistently been lower 13 to 14% in this entire year. Any turnaround in the charts? Is that what you're spotting?
I strongly believe so. I strongly believe that it could be a very good time that IT stocks will start to try and take the next leg forward. It's been a strong sector which has done very well in the last 1.5 odd month. We've seen IT stocks, large cap names doing very well. I've not seen a point where the mid cap IT stocks are at a lifetime highs and the large cap IT stocks are into a revival phase. We are above the 200 DMAs for these stocks, and names like Infosys, TCS, etc. They're almost 15 to 20% lower from their lifetime high levels. So there needs to be a very strong catch up which should be at play, and I think we are in that process to for the IT stocks in that sense. So my belief is that good part of 2026 we should see the IT stocks carrying this momentum.
Okay.
More bunch of stocks that are going to be in focus today. Let's talk about Aurobindo Pharma. The update that we're getting, their arm Curatech Biologics has terminated their agreement with Biofactura in the US related to their BFI 751 drug. Kunal, on the charts, how is Aurobindo Pharma shaping up? We've not seen a lot of momentum from pharma names recently. What's your take here?
See, from the last 3 months perspective, Aurobindo Pharma has done reasonably well. I think from a point when it was 1,050 levels thereabout towards, I think recently it was around 1240, 1250 mark for Aurobindo Pharma. So I think in that context, in the last 3 months, it's done reasonably well, 20% up higher. But then on the short-term charts, there seems to be a major resistance which is creeping at the 1240, 1250 levels for Aurobindo Pharma. There have been, I think, 3 or 4 tests towards this 1240 mark, and every time the stock literally tries to test the resistance point, it gets into a corrective phase. There is a supply which is much on the higher side, so which means that the stock is just about going through a time-wise consolidation. It may just about consolidate at the 1240 levels or sub the 1240 mark for maybe another couple of weeks. A breakout of the 1240 levels is the really crucial point to watch out for. So the near-term trend for Aurobindo Pharma is more of consolidative, but the medium-term trend, which started off 3 or 4 months back for the stock price, indicates that we are looking at this phase of a pause and then a breakout on the upside.
Okay.